Hello, traders. It is Wednesday, the 7th of February, 2018. It's 8:04 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. My futures quote board. Where are you? I had to really shut things down yesterday in order to keep my computer running as efficiently as possible, and that included the quote board. This morning, the leaders, well, at least on my quote board, are crypto's Bitcoin, up quite a bit, followed by the DAX. The DAX is up 1%, 113 points. Euro stocks up 0.74%, 25 points. US dollar and a Japanese yen. Looks like everything is below water. From there, including gold, tens, the bond is almost unchanged. Well, it's one tick down. We're simply opening, looks like in the indices, we're simply opening inside of yesterday's range, just below the close, which was near the session's highs, pretty much across the board. So that's the market allocation this morning. I would not call it, despite the presence of a lot of negatives this morning. I would not call this an allocation of safety just yet. The European markets are performing very well relative to the U.S. markets, but we're still trading in range, out of value, above value. So in the ES, so we'll see how that goes. In today's session, I'm going to spend a minute talking about cryptos, namely Bitcoin. I did an update last Monday where I talked about, I don't know if you guys recall, where I talked about the likelihood that we would continue lower, and we would be looking for a move down. We were in the $10,500 range, and I discussed $5,700 as the lower tier, and $8,200 as the upper tier of the next tests. So we'll go over that today and discuss for a minute. Let's have a quick look at what we expected yesterday. One more thing, just a quick glimpse of the calendar. The calendar today is relatively clear. We have crude oil inventories at 10:30 Eastern, expecting a surplus of 3 million. Distillates expecting a draw of 1.5 million, and gasoline expecting a surplus of 1 million. We're looking for consumer credit at 3 p.m. Eastern. This morning, Fed Speaker Kaplan spoke. Also Dudley at 8:30 Eastern. At 10:15 Eastern, we're looking for Fed Speaker Evans. And at 5:20 p.m. Eastern, we're looking for Fed Speaker Williams. And that pretty much wraps up the day. So nothing too significant. Here's what we expected yesterday. Now, so one of the things I want to point out, I got an interesting direct message yesterday from someone who seemed pretty upset. I'm sure it's because of something I did. The complaint is that, shut up and stop guessing. So he's looking at what I'm doing, what I'm tweeting as guesses, and that I shouldn't be guessing. And unfortunately, given that the nature of trading, that's all it is. It's as intelligent a guess as you can make, because if you're not guessing, then you know. And you and I both know that for $25,000 a day, I can tell you what the answer is every time with 100% certainty. So it's just a guess. If you do not accept that trading, your next trade, the bias you formed, the probability or the likelihood of a positive outcome, meaning a win versus a loss, is purely a guess, if you do not accept that, And I suggest you go find something else to do, because that's all it is. In fact, in our capitalist world, it's all a guess. Every venture you will invest in is a guess. Every business you open is a guess. Every business you close is a guess. You might have sold your Bitcoins when they were at $9 or $13 because you made a 50% return. You guessed, and you missed a $19,000 plus return per coin, like the guy who bought pizza with his Bitcoin. So this is all a guess, and it's really important for all traders to understand. That's why there's a risk disclaimer. There's a risk disclaimer. We don't know what's going to happen, and I want to make sure that we're well aware of it. If anybody guarantees returns when it comes to trading, no matter what trading it is, run the other way. And I'm not here to rant and make fun of the guy. I'm just basically telling you how it is. I could convince you that I have some sort of way of knowing exactly what's going to happen and hide from you any losses, but what's the point? Anyway, this is what we expected yesterday, and again, it's a guess. The expectation is for responsive. This was scenario 1. The expectation is that the market will likely be responsive. I did say that traditionally, with this kind of range, we would poke down, we would poke through, and we may do that in the afternoon. The primary target for me was 26.28, which was left in the dust. 26.28 was about 62 behind, 62 points too soon, given the range that we traded. So yesterday's range was about 100 points. And I'm sorry, hang on, my throat's dry. It's about 100 points, and it's really impossible to predict that that's what's going to happen. We understand volatility is very, very high. The VIX was trading in the 39 range. We're used to the VIX being around 9.2 to 9.5, and it jumped way, way up on Monday. And we know it's not going to settle down very quickly. But yesterday, I gave it a 20-point range just to be modest. And I did talk about the fact that it's not likely to drop from the very high range of Monday to a normal range of about 20 points. But I have to be modest with my expectations. And that's why I was going for that 28, which the market took over in about 2 seconds. So this was correct, but not really, didn't really perform well according to what the market offered. Now, I continued to trade all morning to take advantage, but just understand that the point of these scenarios are just to prepare us for the areas we would be interested in before the fact, and to help us see the trade before it happens. It's if you've ever seen how Olympians prepare for competition, there's a video about bobsledders in the practicing for their run during the Olympics, and it's tremendous. So the entire crew stands in the positions they would be in, and they just lean right and left with their eyes closed, imagining what the course will feel like and when they need to shift their weight. And that's basically what we're looking to do here, of course, at a much lower level. But it's really important to visualize what the market is likely to do so that you can just act. When the time shows, when the market shows itself, you're just ready to act because you already visualized it. So that's really part of the process here. This is scenario number 2. I guess I was too lazy to label these. Push up to the upper high volume node from Monday, and then find its sellers. That will be around 2640. Find its sellers and then make the rotation down. And then finally make the rotation down. So this did not happen at all. Okay, so we'll get that piece of it behind us. The next thing we want to look at is what did we do overnight. And again, I closed those. There we go. The overnight chart. What do we do overnight? We had a pretty decent range. We traded 2660 to about 2697.50, about 30. It's exactly 37 points. Again, third standard deviation type of range. And we have a multiple distribution profile. The volume is about 3 times, a little over 3 times what we would consider to be normal. And we have these two distributions here. The market was unable to continue. I expected a continuation and a higher high on the overnight high. I expected a retest of that 2700. And for those of you who are around after the market, I did show what that 2700 looked like. Let me zoom that in here. Let's bring that up. So much data, this thing is dragging. So look at what happened here on the close yesterday at 2700. Some relatively heavy offers all throughout. So we had as we retested approximately 1,200 contracts, about 600 to 1,200 contracts per price up to the 2,700. The market basically pushed up against and was unable to push through. And so we had this offer sitting out there. Remember, pretty much the entire day, the depth of market was in the 100 to 200 contracts per price, and all of a sudden at 2,700, which is a major strike price, it's a century figure, is getting a lot of offers, and it had a hard time pushing up through it. So when we push forward to the overnight session, that size remained there. So the history, see this size just remained up here. 1,500 contracts offered at 2,700 and 500 more above there right after the close. As we go through the overnight session, that size remained there on the revisit. There we are. We reopen. We get fairly close. This is not enough to update that depth there. But as we push to 97.50, we see that the market had that offer sitting up there. I expect that to stick around today. I expect the market to challenge 2,700 before it makes its next move. So I'm looking for that to be a key indicator of where we're headed. So that's, from the overnight session, that's really what we have. We've put in almost an incomplete cup and handle type of formation with a pivot around this 87.50. I'm not a formation type of trader, but overall what the market has done is it's put in a pretty good taper at the low. It has balanced down here. We have pretty good structure at 2675, 2670 for initial support if the market is looking for a base. So if it pulls back, this is an area I'd expect to have at least minimal support before the next leg up. And that's what I'm looking for this morning. Let's look at the current view. Yesterday, we got back to Monday's VWAP. We got back to Monday's mid, and the key LVN is right here at 2690. 99 or so, or 97 actually, and we just came right back to it. So we've half back the move from the prior day, and we're lingering above value. Value is this gray area right here, and you can see it has a fair amount of trading that occurred in it. We closed out of value, and then we're opening in range out of value. Okay. And so overall, my expectation is for the market to become responsive here early on, again, down to 2670, 2665. Volatility is really high, so it's really hard to predict the turning points or to have a good guess at the turning points. but I'm looking for this to challenge 2700 and for 2700 to pop through to have an impulse push. And the next area up will be the point of control of Monday, 2722. And then the next challenge area is the next LVN. And so if you look at the overall, how the overall market traded, it has spent a lot of yesterday challenging and retesting the prior day's key auction areas, but it's doing so with the higher time frame in control. So it's very hard to see how far it'll push. Right, the market. I posted that according to my stats here, the depth of market's about 12 to 17% of normal. So it is light. It's quite light, so it can push through prices very easily. You probably noticed how fast it moves. It's very electronic, and there's a fair amount of size that's going through. Yesterday we traded 3.29 million. The day before that we traded 3.32 million during the pit session. Those are fairly high. That's 3 times the volume for many-fold times the range. So this is pretty meaningful movement that we're seeing. However, the market's point is to seek balance, and it's likely to seek balance by exploring the far edges, as far an edge as it can find. It needs to go to find sellers, as far an edge as it needs to go to find buyers, and then settles in the middle before the next deliberate move takes place. Okay, so this is what we're looking for. Anyway, so we're looking for the overall action that's expected is that the market will likely pull back a little bit and then continue higher. We did test below, so that was the primary idea. Now, if the market pushes higher and falls back through and regains the value area, I'm expecting a bounce at value high, which is at 69.50, 70, and then target 37. Now, if we fail to get back up and through the 69.50, we're looking for new lows. We're looking for it to get down into the 25.65, 25.55 area. If it's unable to regain, it is likely to have found its sellers up here, and it has moved down in an impulse, has pulled back to 50 to the midpoint, and then continue lower, continue this impulse lower. To me, this didn't look like it was really auctioning below very well, but the market's been doing that, where it comes down and it makes a quick test below, looks for further sellers, finds buyers, and then it just takes off, rips up. So that may be the scenario, but the story will be very clear once we get back into value. And if we're not able to get out of value, then we're looking for it to test this thin part of the profile fairly quickly. That's your secondary scenario. Now, to finish up, I want to talk about Bitcoin for a minute. Yes, yesterday's value area is valid. It's Gaussian. So, yes, last Monday, this is a daily chart of the Bitcoin US dollar pair on Bitfinex. And last week I talked about the strong potential for Bitcoin to continue lower. I see a lot of hodlers and buy the dippers and so on. And I talked about the strong potential for a push down into about 85 or 8,200. I don't remember which. But the key base area that I'm expecting is at 5,700, this line right here. And the reason I expected 5,700 is that is the highest volume area. That's a lot of Bitcoins that traded hands in this area. That is the next highest area that the market has put out. Below there, we get all the way down to 4,300, and we start to trade the next zipper down. So I'm looking at these zippers, and of course zippers represent volume, and I'm looking for the market to push down. So we've pushed through this zipper. We had a little bit of a bounce at the 8,200 for a day, and then we fell through to below it, and we bounced back up. And then yesterday afternoon, once it dipped below that 6,000, I said that I'm expecting a bounce from here, and it is up. Today it's up slightly. It's trading a high of 8,400 and the low of 71.75 in the last 24 hours. So it's having a bounce. I mean, it's not bad. It's $2,500 from about 6,000. But I'm not advocating to buy it. I think people forget that when you get this kind of movement, it is, especially on something that most people don't understand, it is ridiculous to expect that it just goes on and on and on. There are predictions of $50,000 per Bitcoin. The fact is, I believe in the technology and the concept of a decentralized currency that is accepted by all around the globe, but I don't think that it's smart to hop in on the frenzy. I mean, this happened to me. My Lyft driver had an additional iPhone on his dashboard that tracked his Bitcoin position for him. And when he found out that I was a trader on the ride to downtown, he had to tell me how much he has and what he's done. And to me, nothing against Lyft drivers. It's just when people get that excited, it's really the top is likely very near. You know that based on mass psychology. Who else is left when when Grandpa's asking what Bitcoin is? So that's what I wanted to share with you. These, I just put a profile on the Bitcoin contract and on the Bitcoin pair, and I'm just going off of these key areas. The point of control for Bitcoin is way down here at 2,500. It has bounced up to 4,200 and back down. You can see the red line bouncing up and down. But that is the overall, that is where I expect it to settle down and come back into value. I expect that'll be a fair, that's where the pricing of this product is fair. It's based on technology alone. It doesn't have anything backing it. And at $20,000, it was definitely very rich. That's all I had for you today. Good luck, and I'll catch you tomorrow morning. Take care.